Hi, my name is Rajneesh Kumar Rai and I am first year PGPM student of IIM Tiruchinapalli. For the partial fulfillment of our Indian economic course, I am here to talk about non-performing assets and its related problem to the banking industry. So, first of all, let's try to know how a bank works. In layman terms, bank accept deposits from the general public in form of cash and lend it back to the needy people. The difference of rate of interest on deposits and loan is the profit which bank earns. So what happens when someone takes a loan from the bank and not return the loan amount within the stipulated time frame? So in a way, it's a loss. It's a loss to the bank because the bank is paying interest to someone who had deposited this amount. So from here, the term NPA comes into the picture. So what is NPA now? According to RBI, term loan on which interest or installment of principal remains overdue for a period of more than 90 days from the end of a particular quarter is called a non-performing asset. Now we will try to find out how big this problem is and why every bank try to keep their NPA level as low as possible. So we will see. So we'll first try to see what all are the implications of the NPAs on banks. The most important implications of the NPA is that a bank can neither credit the income nor debit to loss unless either recovered or identified as a loss. If a borrower has multiple accounts, the problem becomes more severe. Like if a borrower one account is in NPA, all the accounts will be considered as NPA. Now, if you look how this problem is started growing in Indian banks. So for that, if you look for years, Indian lenders, especially state-run banks, were engaged in volume game to balance their balance sheets and appease their promoters. This has been so ever since the nationalization of the bank happened in two stages. The beginning is from 1969. So the governments often treated these banks as their extended arms, and for their populist measures, they are using this. They are using the banks for their welfare activities mainly. There used to be competition amongst government banks to flag their total business numbers on front pages of national newspapers, but very little attention was paid to the quality of assets. Every outgoing chairman passed the buck to their successors. So if you look at the figures from rupees 53,917 crores in 2008, the figures grows to 3,41,641 crores in September 2015. In other words, if you say the NPA from 2008 increases from 2.1% to 5.08%, but this is also but there is also huge capital implications on these banks on account of high NPS too. Banks need to set aside money or also called provisions to cover their bad loans. The owners to keep government banks stay afloat lies with the government, which is the owner of these banks. That controls 70% of the banking industry assets. Experts have opinion that the government's capital infusion in these banks is inadequate. Now we'll try to look how to control this problem. So we have several acts which banks generally use to recover the money from the customers. The first one is the Surface Act 2002. So in this act, through this act, the banks or financial institutions try to recover their non-performing assets without the intervention of the court. The acts provide three alternative methods for recovery of non-performing assets. They are namely securitizations of assets, secondly the asset reconstructions, and third one is the enforcement of security without the intervention of the court. The provisions of this Act are applicable only for NPA loans with outstanding above rupees 1 lakh. NPA loan accounts where the amount is less than 20% of the principal and interest are not eligible to be dealt with under this Act. Non-performing assets should be backed by securities charged to the bank by way of hypothecation or mortgage or assignment security. Securities interest by way of lien, pledge, hire, purchase are not liable for attachment under Section 60 of CPC. are not covered under this act if the borrower fails to comply with the notice. The banks may take recourse to one or more of the following measures. The first one is take possession of the security. Second one is the sale or lease or assign the right to the security. The third one is manage the same or appoint any person to manage the same. The second measures which bank always take are they're trying to recover their loan through lok adalats. So what is lok adalats? Lok adalat is for the recovery of small loans. Like according to RBI guideline issued in 2001, they cover NPA up to 5 lakhs both by filing suits or through non-suit cases are also covered under this lok adalat. The third one is compromise settlement. It is a scheme which provides a simple mechanism for recovery of NPAs. It is applied to advances below rupees 10 crores. Fourth one is Credit Information Bureau. A Credit Information Bureau helps banks by maintaining a data of an individual defaulter and provides this information to all banks so that they may avoid lending to these customers. Fifth measures which banks use are recovery through debt recovery tribunals. The Debt Recovery Tribunals Act was passed by Indian Parliament in 1993 with the objective of facilitating the bank and financial institutions for speedy recovery of dues in cases where the loan amount is generally more than 10 lakh rupees. So these are all the measures through which banks try to recover their NPAs from the customers, from the defaulters. So this is the end of my video, and I would like to thank everybody for watching this video. Have a nice day. Thank you.